All right, Chad. Well, thanks for coming back. We've talked a lot about VA disability and a lot about the medical retirement, all that story arc and how that impacts us going forward. Now, one of the things we need to do is make sure we're taking care of our families long term, and that's where life insurance comes into play. Now, as a service member, whether you're active, guard, reserve, you have access to one of the best group life insurance plans around, Service Members Group Life Insurance, SGLI.
Yep.
But you can't take it with you when you leave. Now, there are options that we have that we can make sure that we're covered. So why don't we talk a little bit about those options, like VGLI, that's Veterans Group, but whether or not that's a good decision for everybody, it varies, right?
Yeah.
So can we talk a little bit about SGLI, VGLI, and some of the other options out there?
Yeah. So, the first thing I'll start off with is it's probably one of the best, like probably the best group policies there are. I mean, I've done a lot of insurance over the past couple of years, and most group policies that come in with a client, it's usually 1 to 1.5 times their annual salary or income. That's about average. $500,000 that's large.
It's substantial, yeah.
Yeah, and there's a reason for that. If you don't know, or if the audience doesn't know that, the reason most group policies are kind of small and cheap is they don't do any medical underwriting on you. So your contract's not directly with the insurance company. Therefore, they can't do any medical underwriting. So they rate you as a pool, right? And so they assume that the pool is young and healthy workers, and you're all pooled there together, right? So that's why. SGLI is a little different because they do medical underwriting on you.
When you join the military?
MEPS.
Yeah.
They know you're healthy.
And for the most part, you're young, right?
Yeah, you're young, you're healthy. Even if you're joining late, I mean, you can't really get in past 36 without a waiver, really 40 if you want to really push the limits, if you're like a CW or something like that.
40 is Air Force now.
Yeah.
So it varies by branch.
Yep.
Marine Corps, I think, is 26, 27,
Yep.
something like that. So it varies. But by and large, the military population, when you join, you're young and you're healthy.
Super
and
healthy.
Even most people, by the time they're retiring,
Yep.
most people are out as young as 38 to 40.
Yeah.
And sometimes mid-40s you're retiring. So by and large, the overall population is young and healthy.
Correct. And so, it being cheap like that, I see a lot of veterans that go cheaper because they want more of their drill paycheck, but they just don't understand how beneficial of a benefit that it is. I mean, it's like $31 a month. That's not a lot for $500,000 that you didn't get medically underwritten on. So I do encourage veterans that if you got it, max it out. Whether you got a family right now or not, it's hard to get it turned back on and go back up. So keep it. Don't lower it. I'm just saying that for the cheapskates out there. If you're a single 18-year-old guy right now, you'll probably have a kid by the time you're 24, and you're gonna, kind of hope that that's the case. Now, the SGLI is for inside, so service, kind of hints to it, right? Then there's VGLI, so veteran group. What I encourage people to do is I encourage them to seek out the information on this. And this is probably a problem upon my industry. I do have like a holistic planning team that does the investments. We do the VA claims consulting. We do insurance. We do tax and accounting and stuff like that. What my industry kind of lacks on is the education of survivor benefits, right? So not necessarily SBP, but like the insurance in itself. Most of my industry is off chasing doctors, lawyers, and dentists. They want high yield people. They want people that they're going to get a large premium out of, and then therefore they get a large commission out of it. We just don't get educated like that. So when you see insurance, the only interaction that the average person has with insurance is car insurance. And in that aspect of it, it's do I have it or do I not have it? There is a certain limit. We won't get into that here, but there's a certain limit. That's not life insurance. It's what do I want to leave the people behind if I leave, right? And you can be given as much as whatever your human life value is. And just the rough math on that, because there is a calculator for it, just rough math if you're at home, if you want to know what your human life value is, it's you run a stop sign, a Budweiser truck hits you, right? And your family's got to go to court. How much are you worth in court? Right? Hate to be like that black and white with it, but that's just your human life value.
But that's going to be like a legal definition, not what it means to anybody else.
Yeah. Everybody matters. I promise. I love you all. And the rough math would be just subtract your age from the age of 65, rough retirement age for us right now, and probably be 70 in a few years, and then multiply that by your current annual income. and that's it, right? So a majority of us are walking around, if you're like 80, 90,000 a year, you're probably walking around at like 2.5 million. And I never recommend get a $2.5 million term policy, but definitely get a quarter. You want something that your family can have when you're gone. And that's probably a good segue for the SGLI VGLI. So the VGLI will convert as long as you do it within 240 days. If you do it within 8 months of getting separated, you don't have to go through medical underwriting, which is super beneficial. When you go through the VA claims process, you turn in a lot of incriminating evidence about yourself to an insurance company, because what they will do is pull something called an MIB report, a Medical Information Bureau report. And what it is insurance companies telling on their clients to other insurance companies, basically, right? And then they pull credit reports. If you're a high risk in any of those areas, that's what you're going to be rated off of.
Yeah, but let's talk about that for a second. The purpose of insurance is to shift risk from yourself to someone else.
Risk mitigation,
right?
correct.
Risk mitigation. So the purpose of life insurance for me is to take care of my wife and my kids. And whether you have a family or not, like however that works, your situation will be unique to yours. But you want to make sure that you have enough insurance that you can cover their needs, whatever that might be, whether that's mortgage, education, any debts that you have, and then to provide for the income, like you said. So, the acronym DINE is debts, income, mortgage, and education. That's if you have a family or whether those apply to you. So the insurance company, they need to account for that risk, right?
Yep,
and that's why they're looking at that MIB, that Medical Information Bureau, and they want to know what kind of health conditions you have. That's why when you get an underwriting process, they're going to look at what is your age, what is your gender, are you a smoker,
Yep.
do you have these underlying medical conditions.
Vaping, that's a big topic nowadays because we don't have enough information on it long term.
Yep.
They basically consider that as smoking.
And probably rightly so, because you are putting contaminants into your body.
Clue.
Yeah. So those are the things that when you're going through that underwriting process that the health insurance company is looking at. They're going to do a blood draw. They're going to do other things. So when you have this group life insurance plan like we have with SGLI, you don't have to go through any of that. You've already done it with MEPS, as you mentioned, but you're already there. Yep. Now, if you're looking at VGLI and you're saying, I can convert that within 240 days, right away, and there's no underwriting. But if I let that lapse, then I have to go through the underwriting process, which can open doors to changing things or perhaps even being denied.
High likelihood of decline or table rating. So there's 16 rating classes in insurance, and so what most people see, if you've ever had an insurance guy come door to door to you, they'll show you prices, and they're roundabout. I never give anybody that. I always give everybody whatever the middle of the road is, because I don't know your health history, and you don't either. If I give you the highest number, I'd be lying to you. So, but most people will see like 1 through 3 or 4. So it's like elite, preferred, NP, so non-preferred, and then like non-smoking. Anything past that's going to be smoking or table rated, and that's when it multiplies by double digits in percentages. The problem with it is you pretty much just need to go get personal insurance after that point. You kind of nix the whole SGLI, VGLI conversion if you don't do it within that time period. Another like bonus fact, by the way, is you get 4 free months of SGLI coverage when you get out. If nobody knows that, when you discharge and you try to convert to VGLI, they'll have a waiting period before the VGLI kicks in, and it's essentially free coverage of SGLI for 3 to 4 months, and then you'll see the premiums start kicking in for VGLI. So you still apply like literally the day after you get out. It'll take like a few months for the premiums to hit, but that's because you're getting free like SGLI in that time period. Yes, the underwriting gets substantially harder, mainly because we're all a bunch of caffeinated, nicotine addicted. Like, sometimes by the time we get out, we've used so much testosterone that we can't burn fat anymore, right? So a lot of us become uninsurable or high risk of uninsurability. And that's not on the insurance company. I mean, it's a business. Would you want to go into a business with somebody knowing that you're going to have to pay them if they die?
Again, it's about shifting risk, right?
Yeah, you're shifting risk. And so we do look at the insurance company as big bad guys sometimes. At the end of the day, it's a business, and sometimes if you have stocks, you may actually have stocks in that business. If it's a stockholder, if you're a mutual policy holder in that company, you are part owner of it. So they're not just doing it for their own sake, they're doing it for everybody else that's underneath the umbrella, right? So it's not a question of big bad wolf and I'm just one of the little pigs, right? They have to do it, and that mitigation of risk is just an offset. Like how much do the company want to take on and how much do you want to pay to take on this part? When you're doing it, what I do recommend is just point blank for everybody, do the conversion because it buys you time, right? Preferred is to try and write a personal policy and parallel it with the VGLI, right? Mainly because you probably haven't done you haven't done any of your disability stuff yet. You probably haven't gone to see a doctor, probably haven't been diagnosed, so that's not in your records. So you can write a clean contract with an insurance company, and a representation is a statement that you make to the insurance company saying, hey, I am healthy. And you have not been diagnosed with a condition. There's nothing wrong with that. There is a contestability period of 2 years for most insurance contracts where they will come back if you pass away in that time frame to see if you knew. But if your diagnosis date's say June 5th and you wrote the contract on June 1st, they're not going to find that because you weren't diagnosed with it, you didn't know about it. Happens plenty of times. You can write a contract, pay the premium up front while you're in underwriting, get diagnosed with cancer, die during the underwriting, and still collect your death benefit. Your family can. You won't probably, but
yeah, and that, actually that's a good comment. Like life insurance isn't for you; it's for your family, right? So it's just another way of saying.
I always say a good life insurance policy helps your spouse decide who they're going to marry next, not who they have to marry next.
Okay.
Yeah,
I like that.
It's true.
Okay.
If you care about your family and you want, hey, I want her to be happy or him.
Yeah.
It's a decision of who they have to and who they want, and what do you want for them?
Yeah, I want the best for my family. Well, let's talk a little bit about the differences between SGLI and VGLI. Let's start first with cost. SGLI, as you know if you've served, SGLI is the same for everybody, regardless of your rank, your status, your age, whether you smoke, your physical condition in the military. It doesn't matter. From day one till, if you're a 4-star general, private first class on day one, 4-star general, age 62, 18 to 62, everybody's in that same group. Everybody pays the same amount. It doesn't matter. VGLI is not like that. Can you tell us a little bit about VGLI and how those rates change?
Yeah, so in simple insurance terms, you have level term, and I'll refer to term as group, okay, because they're kind of the same contract. There's a finite amount of time and it ends. There's a finite amount of money and it ends. So it's what we would call in the insurance industry level term. That's kind of what it is basically. So you pay the same price over the term, and the term is how long do you serve. You can go 5 years, you can go 20. If you're a CW5, you'll be there until you're 200 years old.
Well, that's fair.
That's fair enough in their broom closets. I love those guys. VGLI is a little different. Now, we go back to SGLI is cheap because they do medical underwriting. They do not do medical underwriting on you at VGLI, and it is assumed that you have probably incurred injury, mental health issues, disabilities, and now they haven't done medical underwriting on you. So it's good as a 24-year-old because you come out and it's like, oh, this is like $32. I was paying $31. That's not bad. That's in the insurance terms what we call yearly renewable term, but it terms every 5 years by 5 years. So in an insurance world, if you get a yearly renewable term, it's dirt cheap up front, but the premium goes up as you get older, right? Because the risk is getting higher that you're going to hit your mortality age. With the VGLI, it's doing it every 5 years, and by 5 years, it's a sharp uptick. When you're at 50 years old, it's up by 57%. At 55, it's 81%. Then 65, 48, and 53% by the time you're 70.
Yeah.
It increases by that much.
Yeah, and you can look at the charts, and we can put a link to those in the show notes. We also have them on our website. But yeah, if I get out and I'm in that 25 to 30 year range, it's not very expensive. It's relatively affordable.
It's like $35 or $40.
Yeah, but by the time I'm hitting my 50s, we're talking, we're in that $100 range. I don't know exactly what it is, but I have looked at the charts, and when it tops off, you're starting getting into your 70s, you could be spending $1,000 a month on insurance. So what most people are doing is either they get to the point where they have to drop it because it's unaffordable, or they're dropping the amount of coverage because the premiums become too much.
Yeah, and you can do one or the other, and once you drop it, you don't get it back.
Yeah.
So yeah, you're correct. And that same policy, let's say a 45-year-old gets a 30-year term compared to that same term, there's going to be about 175,000 that you'd pay in your VGLI over a 30-year from 45 to 75 compared to 45 on a level 30 term. On most insurance companies, that's just like a very rounded number from their like top tier bracket. That is a large amount of money, and I call term in that type of group, that's renting your insurance, right?
Yeah.
That's you're paying all this in, and then you might not even see any of it because you're going to outgrow it. You're going to outage it, really. And it makes sense by the insurance company. Imagine if they just gave this dirt cheap group policy to everybody for life. It would imply it's prudential.
Sure. Yeah. No. Yeah. They wouldn't be able to afford it, so they have to do what they do.
Yep.
So VGLI, because it gets so expensive over time, we said either people will drop it or they'll have to decrease their coverage. So it is a good option as a transitionary insurance.
Yes.
Or if you find out you transition into it and you find out you're uninsurable elsewhere, then you can keep that because that might be your only option.
Yeah, for a while. You can become insurable again. You show good health history over 5 or so years. You can reapply with an insurance company, and you might actually get, I've seen people go to like the second tier after being declined like 4 years earlier. I've done that. I've wrote those policies.
That's good.
But it takes time. Takes time. You got to have a healthy record. If you're still working on disabilities, you're probably not going to have a healthy record. It's a trade-off, and that's why I try to really capture. My company originally was a transition company. It was a transition service rather than VA claims, and then this market, this market. It was originally, you need to check all these steps. It slowly became a VA consulting company, but it originally was my story. When I got out, when you go to insurance business, the first policy you write's your own. 3 days. That's how long it took them to decline me. It is to this day the fastest decline I ever got because I was going through my VA process. I was mentally unstable according to the insurance company. I had shoulder open issues with surgeries, and I couldn't write insurance until last year. It's been 5 years. 5 years it took me to write an insurance policy on my own self.
Yeah.
So that plays a key factor into it is if you're worried that the VGLI is going to go up on you, you can simultaneously write underwriting. You don't have to take the contract, but you can write it, see what your writing is, and compare the two.
Sure.
And that's what I usually advise my clients to do. Like, hey, let's do a term policy that's either a match or more to that quarter number that I want for your human life value. And if it's too much and it doesn't make sense, we'll either lower the death benefit or we'll make another decision. But you run out of decisions if you wait to do that application after you've gone through the VA process. That kind of leads me into another story. So unfortunately, one of my best stories is a loss, right?
Yeah.
And I was very competitive in my earlier years. My wife and me, we met through kickboxing. She's a 4-time world champion. We won a lot of fights. We were very good at that, by the way. But I didn't lose too many fights, and neither did she. But the losses we had, I mean, I learned so much more than like fights I've won. So this is like one of those stories. When I entered into the financial planning, consulting, advisory field, the first rule that you do is 101 is you start going down your phone list, call everybody close to you, friends, secondary, third, and start building a client list. One of the clients I reached out to was a soldier of mine on a deployment. I was this platoon sergeant for a couple months, and then we both got repositioned once we hit Afghanistan. He was one of the first few people I called. I couldn't tell you what number it is. And I called him about 2 or 3 times. He was always super polite, very nice guy. And he'd turn me down, but always gracefully. I'd be like, okay, well, I'll follow up again later. Fast forward to last year, and he passes away in a motorcycle accident. So I see it on my Facebook thread, and then I see that he just got married. I'm like, okay, well, maybe I can still help him. Let me call his wife and see if I cannot like help her disperse the death benefit. Maybe he got VGLI, right? Maybe he's still in. I didn't know if he was still in.
Yeah.
Call her. Man, it is a heartbreaker. Call her, and he was not still in. He had not converted his SGLI to VGLI. He did have 100% with the VA, but they weren't married long enough, and he didn't die of a rated condition.
Yeah.
So she was not eligible for DIC, and they had no death benefit. he tried applying through a USAA type company, and they declined him because of his disability. What makes it horrible is not that he was a newlywed, but she was 2 months pregnant.
Yeah.
So I can't remember if he knew the sex or not. I know they were about to tell the family the sex, but he passed away with leaving nothing. And thankfully, one good thing out of the story is the child is eligible for DIC. So
Okay.
not her, not the wife, but the child. So we worked that out. I still stay in touch. I think I talked to her a few weeks ago. That was a loss when I first got in the finance field. And if anybody's actually watching this that's military thinking of getting into the finance field, I was very wishy-washy, and I was this way as a recruiter. If you didn't want to do it, fine. I'm even still slightly that way with clients that come to me, hey, get back to me. I'm not going to chase you down. You'd be comfortable with this decision. That caused a sense of urgency in me to educate people more on that SGLI VGLI conversion, because that's not the first. I've had 3 calls this year. So when I talk to a client, I tell them I need to be on the death note. Like, immediate family needs to get called, and I need to be the next guy, because your family's going to need to know how to disperse your SGLI, your VGLI, and if you can apply for DIC and how. I don't like doing that. I don't like being a part of that.
Yeah.
We just had a soldier die last week. That was a medic on a deployment of ours, and I'm not sure how he died yet, but he's young. So, I'm going to that funeral on Tuesday. And I'll talk to his family, see if they need help.
Yeah.
It's short-sightedness. You will not always be 24. You will not always be invincible. There will come a day that you will either have a family or someone will depend on you. And short-sighted decisions, they're long-term pains. So that's why I really wanted to talk about SGLI VGLI today. Is I think about her and that baby all the time. I feel like I let him down. So.
Well, you can have that feeling, but you didn't let him down. Having those conversations, if somebody's not receptive, they're not receptive. But that's why we're here today. We're here today to talk to you so that you can hear these stories and have it not be you. Life insurance is not for me. It's not for you. It's for our spouses or for our loved ones, for our children. Even if you're not married today, if you don't have somebody today, having a small amount of life insurance, even if it's a small policy,
Yes.
is something that you're going to carry with you. So if you do get married, if he would have had that, it would have been in place.
Totally. No health insurance as well. So doctor
Yeah.
bills, and I get it. It was just my wife and me when we got out. So it was like, why do I need to keep this? And luckily had just started insurance. So I kind of started educating myself.
Yeah.
And I went all in. I did the full conversion of VGLI to a permanent life insurance policy, because I knew that, I don't want to waste my time. I know I want my wife to have something if something happened. And in all likelihood, because of the mortality rate of male to female, it's 73.5 for us and it's 79 for females. I'm probably going to pass before her, and she needs something.
Yeah.
And it's not going to be term. It's not going to be VGLI, SGLI, and that's why I made that particular soldier made me make the decision that I needed to convert the full thing, because I want to make sure it's there forever. I want to make sure it's there. So.
Yeah, so everybody needs to kind of review what works for them. Now, we did talk a little bit about a term life policy. So because VGLI gets expensive, and it can get expensive very quickly, especially if you're getting out mid-career or later, say you're staying through until retirement age. At that point, VGLI is really starting to get expensive. And you may find that it's cheaper and better to get a term life insurance policy, especially if you're going to lock in like a 20 or 30-year rate.
Yes.
And you're doing that while you're on active duty or still serving guard reserves, whatever that might be, before you do your VA disability claim, before you put that medical information in that's going to be discovered by when they're doing the medical underwriting. Can you talk a little bit about that and who should be looking into a term life policy, what they should be looking for, maybe how long they might be looking, what kind of a term?
Yeah, it's like most of my things, it depends, obviously,
Depends, of
right?
course,
Stage
yeah.
of life. Stage of life is 24-year-old, single, no kids, living by the seat of their pants there, and then you got your 35-year-old with 3 kids and a wife.
Yeah.
So for that 24-year-old, I would really like them to be able to do both, but financially sometimes it doesn't make sense when you're a single income household. That makes sense if we know we're going to write this disability and you don't need it for 5 years at least, just from my experience, sometimes the gamble's worth it, sometimes, but I still encourage them to do a match at a minimum. It's going to be less. In fact, I've wrote policies through companies that beat VGLI, SGLI, and I would have never thought that. You know, it's dirt cheap for what it is, and I managed to get a kid. It was $29 a month for $1 million.
He was probably pretty young.
Yeah.
And at that rate,
24, healthy.
Yeah. So for $29 a month for 30 years, like at that rate, you just lock that in, because that'll take you to your mid 50s. And if all goes well, you might not even need it to have that insurance at that point. If you've reached the point where
either
your home's paid off, your kids are through college, you know, everybody's situation will be different. But you could also get that, and then 5 years down the road, if you get married and have kids, you can ladder it. You can add an extra policy and still come out maybe less, maybe more coverage for less than what you're paying into SGLI, and certainly less than you pay for VGLI.
Yeah, there's all kinds of riders. That's the benefit of writing a personal policy, is when you do an SGLI to VGLI conversion, you kind of get pigeonholed. So even me, when I switched to permanent life insurance, you know, there's a certain product that it translates to that's not as good as, say, a personal policy if I'd have done a whole life policy, which is the one I wrote last year. The one I wrote last year is significantly better than one that's almost 5 years old now. Mainly because I was able to write the contract directly with the insurance company. I was able to pick a premium, PUAs, paid up additions, extra insurance. I got to choose what all the premium amounts were, and there's just extra riders, so benefits that you can put onto the insurance policy. Term policy is the same way. If you write a personal term policy, you can put every rider you want to on, or just take them all off. You can have riders where if you become disabled, the insurance company will pay your premiums. If you're worried about something like that, if you're a high risk job and you know there's a high likelihood of disability, which under 30, you know, there's a good chance that someone under 30, 1 out of 4 is going to go into long-term disability, and long-term disability generally lasts 36 months on average when you do take the claim. So those policies, writing them as a personal direct to the company itself, they become cheaper because you can personalize them and take stuff off or add stuff so that you can secure yourself down the future. There's so much you can do with it. And children, even, I mean, I write tons of like Gerber type policies where if a child has a high likelihood of maybe getting some type of generic, some hereditary disease, but before they're diagnosed, we can write a permanent life insurance policy on the child. There's so many things that people just do not want to have the conversation, and I get it. I pay a lot in insurance premiums. When you do an SGLI, VGLI personal policy conversion, it's not cheap. It's worth it now, 4 or 5 years down the road. It's hard for people to have those conversations because a lot of people, especially this day and age, pension pennies. But that's why you got to be a good advisor. You gotta let them know, like, hey, we need to educate you, we need to protect you, we need to save, and then we need to build. And that's my motto. That's mine and my partner's motto. That's how we want to do it. We want to make sure that if you're going to turn down a recommendation, you at least need to be educated.
Yeah, that makes sense.
Yeah.
Yeah. Well, thanks for sharing that personal story. I know it's not an easy one to share, but it is the reality. Most of us have known somebody who's passed on and didn't have life insurance or didn't have enough. So if you're serving, SGLI is one of the best plans you're going to find. The rates are very affordable. You can get up to $500,000 coverage, but you can't take it with you when you leave the military. You get a 4-month grace period when you leave where that's covered for you. After that, it goes away. You do have the option of transferring it into the VGLI or converting it, but your rates won't stay cheap forever, and they grow quickly, especially once you start hitting your middle age. Once you hit your 40s, 50s, it gets very expensive. By the time you hit your 60s, 70s, and older, it is wicked expensive. And
it's a house payment.
It is, yeah.
It's a house payment.
And people are going to find that they're either going to have to decrease their coverage or eliminate it altogether. So one of the most popular ways to handle that is to get a term life insurance policy, either while you're still serving in the military or right at that transition point. It's generally very affordable. You can get terms up to 30 years usually. You can get shorter terms. You don't have to have it all figured out today. If you're in your mid-20s, you can get $1 million coverage. You can add another policy later, maybe if you get married or have kids, or you buy that large house, or your personal situation changes. So Chad, thanks so much. This is hugely valuable information. If you're out there and you're serving in the military, do take care of yourself. Remember, life insurance isn't for you, it's for your loved ones. Make sure you take care of them. Thanks so much.